So PayPal has been exploding recently, and today we're going to talk about what is going on with PayPal stock and what will happen going forward. As my third largest position, I thought it was about time we gave it a dedicated video, and with the focus being on Hims and Hers, my second largest position, the last kind of couple of days, I thought it was a good time to switch up to another big position. So let's get started on PayPal. Hope you enjoyed the video. If you could, hit the like button. If you're new around here, subscribe. Let's get started. So as recording this video, PayPal is currently up 29% year to date. In the last year, the stock is up 37%, and this is a pretty impressive performance from a stock that has been quite sluggish for a long period of time. It has recently started shooting up and been a very good performer, outperforming the S&P 500 and outperforming many stocks out there. And it wasn't actually too long ago, only 2 months ago, I was talking about can PayPal stock get to $100, and it's definitely on its way from that point of view. But what was actually quite scary is that when I actually made this video talking about can PayPal stock get to $100, when I actually did make that video at the time, I believe the stock was $58. I am waiting for this advert to finish. These adverts are getting longer and longer on YouTube. Yeah, as you can see here, the stock was actually $58 when I recorded this video only 2 months ago. As you can see, the 10th of July. So yeah, nearly 3 months ago. But yeah, only 3 months ago, well, 2 months ago, yeah, 10th of July, PayPal was $58, and how much it has changed since that time frame. But there was a long period of time. There's a long period of time where you could have picked PayPal up in the $50 range, the $60 range, and obviously it's been running up a lot at the moment. And why has it kind of exploded at the moment? Well, the only difference is that the metrics have changed. We've had a multiple expansion. Sometimes the big thing that can move stock prices is people think it's financials. Eventually the financials do move the stock price. You know, the stock price does eventually move the financials. If you're growing at a certain rate a year, eventually that should be factored in. But quite often it can be where the market values you at. And what was happening for PayPal for so long is the market went, oh, we used to value at like 30, 40 times earnings. We're now going to put you down at 14 times earnings. And now what has happened is we've gone from 14 times earnings up to 19 times earnings. So the market has decided we're going to put PayPal at a little bit more of a valuation. And that's really what's moved the share price. Financially, there's actually not been much change. PayPal has consistently performed for the last 4 or 5 quarters at pretty much the same growth rate. The only difference is the market's kind of got a bit more bullish around PayPal, and that's what happens. It sometimes creates the good opportunities where companies can financially perform. At no point did PayPal slack on its performance really that much in the last 12 months. It's just the market kind of went, it's a trash company, and they threw it down to a low multiple, which is where the golden opportunities sometimes come to buy some of these stocks. Buying PayPal at 14 times earnings was absolutely ridiculous because, like I said, financially they're performing amazing. For some reason, just this negative sentiment came out about PayPal, about it being a dead stock. They've got no more growth, which was clearly never the case because there was always growing. It's a value trap and just a load of crap like that. And eventually the market goes, actually, let's put you back up at more of a premium. And actually, 90 times earnings is a lot fairer. You know, the market average valuation historically 20. To be fair, when you look at the S&P's average valuation now, it's actually a lot higher. I would argue the case PayPal is a premium company. If you look at the recent financials that are here, 8% revenue growth, net income of 9% growth, diluted EPS margin of 17%, and the net profit margin as well has recently gone back up to 14% with 1.3% growth, which is obviously as well really good profit margin expansion. Yeah, it's actually a premium company. It should really be trading 25, 30 times earnings. So I would argue the case that the market probably should throw it up to a higher multiple. But as well as that, they've financially been buying a lot of shares buyback. This is amazing. You know, when you own a stock and the shares outstanding are actually declining, and especially when you look in the last year, look at how much they've been buying back the stock. When you own more of the company, that's better as a shareholder. That's what PayPal have been doing, is that they have been using the profit to buy back shares. If there's less shares outstanding, you own more of the business. That's what you want to see. It also improves like the EPS numbers. And that's why, for example, you can see here EPS was up 17%, for example. That's another big benefit of it. And that's what PayPal are doing. They're using a lot of the profitability here to go buy back stock, which is a great reward for shareholders, which once again adds another bonus mark onto why PayPal is doing so well at the moment. And that actually then improves what the valuation is at. So right now we're talking about multiple expansion, and the market decided to throw it from 14 times earnings back up to 19 times earnings because of the profitability ramping up and the share shares they're buying back is actually towards like a 16 times forward earnings. So within 12 months time, we're actually going to be back down at 16 times forward earnings. And in that case, if the company normally trades at 20 times earnings, I think that you could argue the company can be 25 times earnings, 30 times earnings. Within another 12 months, this company, if it stays at these levels, is going to look quite cheap once again. So that's the great thing where PayPal is at. Even with the rally that it's been on at the moment, you can argue the case there's still a lot more upside within inside this business. Obviously, the other thing that's really helped the sentiment is they've actually been making some good moves. We saw PayPal recently change the CEO around about 12 months ago as they brought Alex Chriss in from Intuit, and he's been making a lot of new additions into PayPal. We're yet to see if we get the full results from this, if it does end up being a big contributor to revenue and profitability. But what the suggestion is if he keeps doing these improvements, we'll also see a benefit to the profit margins and revenue growth as well going forward. One of the recent ones that only came out a week ago was the adoption of actually being able to use crypto payments. A lot of people have been waiting for that one. We also had the likes of Apple, for example, that was a big concern around people about Apple Pay. They're having a lot of regulations slapped them at the moment, which maybe PayPal are able to benefit going forward. And with PayPal making all these big partnerships, for example, we've had the likes of the Shopify partnership expanded. We've had Adyen, Amazon, all coming to PayPal now because Alex Chriss is trying to develop the company. We're seeing all these partnerships, and if these can create any revenue or profit for the company going forward, obviously that would be very good growth for the drivers for the company going forward. Looking at what analysts are expecting for the company to do well at the moment, we've had a bit of a slowdown on the EPS point of view because there's been a bit of a change of ownership in a business that they did sell off. If we starting to look at a year ahead, we look at the EPS numbers, we can see the growth in the EPS numbers, which is actually, I think, achievable because it's under 10% growth, which they should be able to do. And from a revenue point of view, next quarter is only 6% revenue growth, which I think they should be able to beat quite well. So that lines up quite well for a nice beat in Q3. Obviously, there was some sandbagging in the guidance given from Alex Chriss in the last PayPal quarter. If they can beat that and beat the estimates on the EPS point of view, the stock should do quite well going into Q3. And for the next year, we're only expecting 7% revenue growth, which I think is easily achievable. And I've got to say, for PayPal to do really well, if they can go back to that 8 to 9% growth, which hopefully they can do with these new partnerships, that would actually see PayPal do very well. Now, from a number point of view, compared to where I was 2 months ago, and I showed you some numbers 2 months ago, these are my updated numbers on PayPal. There's been a few numbers changed. The numbers that I've changed is I've not changed the share buyback at all. I believe in the next 5 years they will still aim to buy back around about 5 billion of stock, which will be great as a shareholder. Revenue growth wise, I have dragged the revenue growth down a little bit. So I've gone 5, 7, 9%. I think previously I was 5, 8 and 10%. So that's just to factor in that the growth is slowing down at the moment, and hopefully they can get back up to that double digit growth. Profit margin of 13, 14, 15%. I have upgraded the profit margins because they are back at 14% at the moment. So I have put a little bit of profit margin expansion on the top side, and on the middle side I've kept the bottom one around about 13% profit margin. Earnings wise, I put 20 times earnings in still because that is the market average valuation. Like I said, I believe PayPal should have multiple expansion, and one of the big drivers for PayPal going forward is if the share price is going to return a lot for us guys as shareholders. We've got to see that multiple expansion again. We saw it from 14 times earnings to where it is 19 times earnings. I believe we could see PayPal expand from that 20 times earnings to that 25 times earnings. That's going to be the key driver for a bigger return here from these sort of numbers. And looking at it right now, the upside is still pretty positive, as you can see here. Even on the low side, there is high side achievable in the next 5 years. On the high side, there's not a 100% return, which is personally what I invest in for. I invest for 100% return over the next 5 years. So that has gone off the top side at the moment. So for me, I personally wouldn't be buying shares at the moment. This is why I was so confident and so heavy to go on PayPal. For the last year, it nearly came my largest position. The reason why is because even on on conservative numbers, I was getting 100% upside. Even on the mid side, there was nearly 100% upside on conservative numbers at like 20 times earnings. That's why I was having so much confidence to buy really heavy. Nowadays, to get a big upside, you've got to kind of see a bit more multiple expansion. So for example, I think you would need to see PayPal go back up to a bit more of a premium of, let's say, 25, 35, 30 times earnings. So if I do upgrade those numbers now and it does go back up to 25 times earnings, there's actually still pretty chunky upside. So I would be a buyer if you do believe they're going to get that multiple expansion. And to be honest with you, if I didn't own shares, I probably would still buy shares at these levels. But for me, obviously, I was buying quite a lot in like the the $50 range, $60 range. So I'm not needing to be as aggressive on these levels, but there's still plenty of upside if they do get that margin expansion, which I think they will do, to be fair. But I didn't even need to take that risk because I was buying it without the risk there. That at 60, when I was buying at $60, $50, I didn't even need that multiple expansion at all. So yeah, looking at PayPal at the moment, it looks really attractive because of the share buybacks, the potential for multiple expansion. The earnings that are expected are pretty low when we look at the forecast that analysts are expecting. The new partnerships could potentially drag them up a little bit more on a guidance and a revenue growth point of view. I mean, if we are able to get back to double-digit growth, where let's say that PayPal do go to the likes of where they're growing 12% again, that'll be really nice, or the expansion for profit margins. But with the new partnerships, hopefully they generate a lot of profit and revenue for the company. But at the moment, yeah, it still looks pretty attractive and cheap at the moment. It's just looking back now, can you believe that PayPal was down at 14 times earnings only a couple of months ago? It was that's absolutely crazy to think about. But yeah, PayPal, everything going really well, and from an upside point of view, I still think there's plenty of upside. I think the key thing that will drive even bigger returns now is if PayPal can go from a 20 times earnings business up to a bit more of a premium of 25 times earnings. That would be really nice, but to do that, I think they've got to really execute. But at the moment, they are doing that, so we never know. So that's the update with PayPal and where everything's at, where my numbers are at with that one anyway, guys. And obviously, if you're a PayPal shareholder, I'm sure you're quite happy because it's been a really good performance this year, which is good because at the start of the year, this was one of my top 5 holdings, the only top 5 holdings out of DraftKings, Hims, Meta, Mercado Libre, and Google that wasn't performing. And now I get to say that my top 5/6 top positions are actually all performing really well this year, which has been really good. So yeah, hope you enjoyed the video, guys. See you in a bit.